Suppose if it is a stationery shop. On 1st May, you pens were sold. How much? 10 rupees. And you purchased some books. That is some 100 rupees. Now, these two things has happened on 1st May. Now, coming to 2nd May, okay, again, you purchased some pens, so that everybody are asking pens, some worth around 100 rupees. Okay, and again, you sold books around 10 rupees. Next one is next Xerox, you did it some 20 rupees. Okay, now coming to 3rd May. Okay, this is 1st May, this is 2nd May, this is 3rd May. You sold some stationery. Okay, this is somewhere around 50 rupees. And next one, again, pens you sold 20 rupees. And again, pens you purchased because there is a lot of demand, some 100 rupees. Now, like that, what you do is from 1st May to 31st May, what you do is you'll write all the things like this neatly in a book. Now, this process, what we call it as bookkeeping. Okay.
Bookkeeping.
Right. Now, what is an account is, now after 31st, okay, just here for an example, I have given you 1st, 2nd, and 3rd. Now, suppose if 3rd May is the end, now after 3rd May, what you do is you identify all the similar items. Now here, what are the similar items here? Pens. Okay. Now, what you do is you open one separate page in bookkeeping and you'll put a heading pens and you write P means purchase, S means sale. Okay.
Okay, ma'am.
So 1st May, what happened? You purchased, your pens were sold of 10 rupees. 2nd May, you purchased pens 100 rupees. 3rd May, what did you do? You sold pens 20 rupees and you purchased another pen, some 100 rupees. Okay. Now, all pens related, you gave one separate page and you wrote whether you purchased it, sold it, by how much. Okay. Now, similarly, you'll open another fresh page. After all these things, again, you'll open a fresh page. Now, next one, he'll open a books account. Now, on 1st May, how much did you purchase books? 100 rupees. And next 2nd May, you sold 10 rupees. And 3rd May, you didn't purchase anything. So, total 110. Okay. Now, next, we finished pens, we finished books. Next, what is Xerox? Now, Xerox, how much did you sell? 20 rupees. Okay. And this is done. This is done. Now, next one, what is left? Stationery. Stationery, how much did you sell? 50 rupees. This
50.
is 50 rupees. Now, here, what you are doing, this is bookkeeping. Okay. Now, what is this you are doing? Pens separate, books separate, Xerox separate, stationery separate. What you are doing it?
Calculating or put transactions.
Now, from all these things, what you are doing is, okay, from all these things, what are the similar items are there? Okay. Now, all the similar items you are putting under one heading. Right?
Right, ma'am.
Okay. Now, suppose the owner of the stationery shop comes and he'll ask you, okay, Zishan, how many pens did you sell? Means you'll tell fatafat answer.
Yes, ma'am.
How much did you sell?
Pencil 20.
120 use, sorry, 110 you sold. And how many pens did you purchase? Means what you will tell?
50.
How many pens did you purchase? Means 100 plus 20. 120.
120.
How many did you sell? Means 10 plus 100. 110 I sold.
120.
If you'll ask what are the Xerox expenses for this month, means how you will tell?
20.
And how many books did you purchase this month means?
100.
How many books did you sell?
10.
How much did you spend on stationery?
20.
Okay. So if owner is coming and asking you any question, you are telling in a fraction of seconds.
Yes, ma'am.
Now this has become easy for you. Now
Yes,
each one means is called as an account. Okay. This is an account. This is an account. Okay. Now these are called as account. Now what is an account? Once you maintain a bookkeeping, after bookkeeping, what you do is all similar items you will put under one head. Okay, pens under one head, Xerox under one head, all similar items. So putting all similar items under one heading, we call them as account.
Accounts.
Okay, now next one. 1st May, you paid rent. Okay, stationery shop rent, you paid 10,000. And the next 1st June, you paid 10,000. 3rd June, you paid 10,000. Okay, every month rent is 10,000. Now, 3rd June, I'll come and ask you how much rent we pay for all these 3 months means how much will tell?
10,000.
For 3 months,
30,000.
30,000. So, May, 10,000. June 10,000, July 10,000. So
10,000.
total
30,000.
30,000. Now this is called as rent account. Okay. Now why we call it as an account? Because all similar entries you are putting under one heading. So all similar headings, if you are putting under one head, then that heading is called as an account.
Account.
So how will define all
Similar.
similar items. If you are putting
To
under one head, then we call that particular is called as account.
account.
Okay. So this is how you define it. I hope you understood what is an account. Now next one is transaction. Okay. Now what is a transaction?
Transaction
A
is
transaction is a financial event that affects financial position of a business.
business.
So transaction may be either a cash transaction or
Credit.
credit transaction. Now this part I'll tell. Suppose purchased furniture for cash 10,000 for business. Can you see this, ma'am?
Yes, ma'am.
Okay. Now, what did you do here? You purchased one sofa set for business and you paid cash 10,000. Okay. And next one, purchased machinery from Mr. Ravi, rupees 10,000. Now, this is first transaction. This is second transaction. Now, why I'm calling this as transaction? Because here amount is involved. Here also amount is involved. Okay. So because amount is involved here, we call these things as transactions. If amount is not there, we don't call them as transaction. Okay. First one. And second one is, now in the first entry, you see that you purchased furniture for cash 10,000. Means what did you do here? You paid cash and you purchased 10,000. Okay. Now coming to the second one, purchased machinery from Mr. Ravi, rupees 10,000. Now here, did you mention that you paid 10,000 cash to Ravi?
Yes, ma'am.
You didn't mention anywhere, no, that you paid 10,000 cash.
Sorry, ma'am.
Okay, you didn't mention anything, no. So what does it mean? Here you are paying cash and purchasing furniture. So this is called as cash transaction. Okay, here you are not paying anything, but you said to Ravi that, okay, the machinery cost is 10,000. No, now you send machinery, later on I'll pay. If person name is given, what does it mean is you did not pay the cash. Now, suppose if you tell, if you are having a stationery shop, one customer came to your shop, he gave you 10 rupees and took a pen. Will you ask his name?
Yes, ma'am.
When person comes and purchase a pen, will you ask his name?
No, 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 no.
10 rupees cash he'll pay and he'll take the pen and he'll go off.
Yes,
Okay. So why didn't you ask his name?
because
Because
he
you
paid
want
cash.
pen. You got 10 rupees. He want pen. You got cash. He got pen. So no need of introducing yourself. Okay. Now suppose a person comes. He takes pen worth 10 rupees. But he'll tell that right now I don't have 10 rupees. I'll give you tomorrow. Then in that case, you should ask his name.
Yes,
You'll
ma'am.
ask
We
his
will ask his name.
name, mobile number, where you are staying. You'll ask all these details. Okay. So if that particular person is paying cash, you don't want any details. But
Yes,
if a
ma'am.
person does not pay cash, you'll ask his name at least. Okay. Now the same thing here. If you purchased furniture for cash, here you see in this transaction, no person name here. In this part. No person name. No person name is what? You paid cash 10,000. He want 10,000 cash. You want furniture. So no name business. But you see the second one. You purchased machinery from Mr. Ravi. Amount is 10,000. Here person name is given. So when person name is given, it implies that cash has not been exchanged. Okay. So in that case, we call this as credit transaction. Okay. Did you follow?
Yes, ma'am.
So understood, no? What is a transaction? If
Yes,
amount
ma'am.
is involved, we call it as a transaction. And because here 10,000 is mentioned, we call it as a transaction. If cash is there, we call it as a cash transaction. If a person name is there, then we call it as a credit transaction. Now, next one is accounting entry. Accounting entry, I'll tell you whenever we start journal entries, then you'll understand better. Okay, now I'll explain you what is double entry system. Okay, can you see this here, double entry system?
Yes, ma'am.
Okay, now what is double entry system is, suppose I am coming to your stationery shop and I took 20 rupees worth of book. Now what is the benefit I am getting?
Ma'am, can you repeat the question again, ma'am?
I came to your stationery shop.
Yes.
Okay. When I came to your stationery shop, what did I do is, I gave you 20 rupees and I purchased a notebook from you. From
Yes,
you
ma'am.
means from stationery shop. Okay. Now, what is the benefit you got from this? You got
Money.
20 rupees cash.
Yes, ma'am.
Okay. And what the benefit I got?
Book.
Notebook.
Notebook. Notebook.
Yes. So in this way, the both are benefited.
Yes, ma'am.
Okay. Then that is purpose we call it as double entry system. Double means what? Both. Both means what? Suppose if any transaction is there, both the parties will be benefited. So that is why we call it as double entry system. What does double entry system say is that now suppose if any transaction has occurred, either it is a cash transaction or credit transaction, both the persons will be benefited. How means, suppose if I purchase a machinery from a shop, what I want is machinery, I got that. What he want is cash, so he got the cash. So that is called as double entry system. In double entry system, what does it say is every transaction has two parties and each party will get benefited. That is called as double entry system. Okay. Now, yesterday we discussed now what is a calendar year? When does a calendar starts?
January.
January 1st. And when does it end?
December 31st.
December. But when does accounting calendar starts?
April.
April 1st. And when it closes? March 31st.
31st.
Okay. So this is called, that is called as calendar year. This is called as accounting year.
Accounting year.
Okay. Next, who is called as proprietor? Who is the owner of the business? He is called
Who
as
provides
proprietor of the business.
business?
Okay. Next one, capital. So what do you mean by capital? Suppose if you are starting a business, in general terms, what we call it as initial investment. Okay. That initial investment in accountancy, we call it as capital.
Capital.
Okay. Capital refers to fund or financial resource invested by the proprietor. Proprietor means what? Owner of the business. So if suppose owner of the business is putting some amount of investment and he's starting a business, then that amount is called as capital.
Capital.
Okay. Next one, assets. Now, usually in general sense, suppose if we have a land, we consider it as property. If we have a building, we consider it as a property. So in general discussion, what we say is property. Okay. But in accountancy, same property, what we call them as assets. Okay.
Okay, ma'am.
Assets means what? Properties.
Properties.
And you have this part, you leave it off, tangible and intangible. I'll explain when it comes. And next one, liabilities means loans.
Loan.
Okay. So usually we tell, no, I took a home loan, I took personal loan, I took this vehicle loan and all. Okay. So in general, how we talk is, okay, I'm taking this loan, I'm taking that loan. But in accountancy, same loan, we call them it as liability. Okay. And next one, drawings. Suppose if the owner of the business is investing some amount, then we call it as capital.
Capital.
Okay. Now the same owner, if he withdraws some amount from the business, we call it as drawings.
Drawing.
Okay. And next one is debtors and creditors. Today's class I'll explain at the last. Purchase means, do you know what is a purchase?
Buying something.
Buying something. Sales means? Selling.
Selling. Product.
Selling. Okay. And inventory means?
Raw materials.
Raw material. Okay. Revenue means?
Expenses.
No, revenue. Revenue means, suppose if you are having a car showroom, okay, you started a business of selling cars and buying cars, okay, and suppose if you sell a car, on each car you are getting 1 lakh profit, okay, that 1 lakh profit we call it as revenue. Did you understand?
Yes, ma'am.
Okay. Now, what is a revenue with which you are doing business? On that business, if you are getting any profit, then it is called as revenue. Now,
Revenue.
for example, if you have a stationery shop, you are selling books, pens, Xerox, everything. Then on that, if you are getting an income, on that, if you are getting a profit, then we call it as a revenue. Now, suppose in the same stationery shop, you find that one furniture is not there, means not working. You don't want that furniture. If you are selling that furniture and on that if you got some profit, nobody will call it as revenue, but rather what we call it as income.
Income.
Okay. So revenue means what? On which you are doing business. On that if you are getting a profit, then we call it as a revenue. Okay. And expenses means they are self-explanatory. Okay. What are the expenses you are keeping? Next one is payment voucher, receipt voucher. You know what is the meaning of voucher?
Yes, ma'am.
So suppose if you are, what you'll tell, if you go to a petrol bunk and you put a petrol, what you'll ask him? You'll pay the cash. Okay.
Cash.
And after cash, suppose if any reimbursement is there, then you'll ask her, okay. Now, if you go to a shopping mall, you do shopping, and in return, what you get is called as
Coupons.
He'll give you a bill. What is that bill called as?
Receipt.
That is called as receipt voucher. Okay. And next one is payment voucher. Now, have you all understood these terms?
Yes, ma'am.
Okay. Debit, apart from debit and credit and accounting entry I'll tell when we start journal. Okay, that you keep it aside. Now, account means all similar items you are putting under one head, then we call it as an account. Transaction means if any money is involved in that, then we call it as a transaction. Accounting period starts from 1st April to 31st March. If a owner invests the amount, then owner is called as proprietor. And whatever the invested amount is there, that invested amount, we call it as capital. In accountancy, assets means properties. Okay. And next one, loans means we call them as liabilities.
Liabilities.
Drawings means suppose if owner withdraws some amount from the business for his personal use, then we call them as drawings.
Drawings.
Okay. And next, purchase means if you are buying anything. Sales means if you are selling
Selling
anything.
something.
And inventory means raw material. Revenue means whatever income you are getting from the sale of items for what you are doing business. Expense, and these are self-explanatory. Receipt voucher and payment voucher. Okay. Now, next one. Can you see the screen?
Yes, ma'am. 2nd May, 3rd.
Hmm?
Saturday, May.
No, I'm asking, can you see the screen?
Yes, ma'am, I can see the screen.
Okay. Now, I'll write one thing. Ravi, okay, purchased books from Rahul worth 10,000.
10,000.
Okay, 10,000 and still okay. Now, can you see this? Ravi
Yes, ma'am.
purchased books from Rahul worth 10,000. But Ravi said that he will pay the amount next month. So is the first one. Is it a cash transaction or credit transaction?
Cash transaction.
Hmm.
Sorry,
Cash
credit.
transaction means what will happen? Immediately he'll pay the cash now.
Yes, ma'am.
Okay. But in this, what did Ravi say? What did Ravi say?
He will pay next month.
He'll pay in next month. He'll pay next month means what? This month he didn't pay the cash now,
Yes, ma'am.
but he took the books.
Hmm.
Yes.
Yes, ma'am.
So then it is called as
Credit
credit
transaction.
transactions. Okay. Now, this part you understood, no? Now you tell
Yes,
me,
ma'am.
first, who is the first party here and who is the second party? Okay, instead of party, what we do is, who is the first person and who is the second person here? Tell me.
First person is Ravi.
First person is Ravi. Who is the second person?
Rahul.
Is Rahul.
Rahul.
Now, who is buying and who is selling? You tell me.
Ravi is selling.
Uh,
Sorry, Rahul is selling
Rahul is selling book. And who is purchasing?
Ravi.
Okay. Now two persons are there. Ravi, Rahul.
And Rahul.
Okay. Rahul is selling the book and Ravi is
Buying the
purchasing or
books.
buying the book. But did Ravi pay the amount?
No, ma'am. He will
No,
pay next month.
Ravi did not pay the amount. Okay. Now, can we say that Ravi took credit from Rahul?
No, ma'am.
No. I'll ask you in another way. Now, two are there. Ravi is selling the book and Rahul is selling the book and Ravi is buying the book. Okay. Now, which person should give money to which person?
Ravi should give money to Rahul.
Rahul. But did Ravi give a amount immediately?
No, ma'am.
No. What did he say?
He will pay next month.
Next month. So, if he has to pay the money and he is not paying the money, then he is called as debtor.
Debtor.
Okay. Debtor means from which we should get the money. Okay. And what did Rahul give to Ravi? He
Credit.
sold the book on credit. Okay. You know the meaning of credit, no?
Yes, ma'am.
Credit means on loan he gave. So Rahul is called as creditor.
Debtor.
Did you understand, ma?
Yes, ma'am.
Now, first one, two persons are there, Ravi and Rahul.
Rahul.
Ravi purchased a book but did not pay the cash. Okay. And Rahul sold the book, but he still did not receive the cash. Okay.
Cash.
So what happened is Ravi has to pay. Who has to pay the amount? Ravi has to pay the amount. So the person who has to pay the amount is called as debtor.
Debtor.
And who has given credit? Rahul has given
Rahul.
credit. So this person is called as
Creditor.
creditor. Okay.
Ma'am.
Okay. Now, can you see this?
Yes, ma'am.
So Mohan purchased a furniture from Voltas Limited on credit worth 50,000. This is a cash transaction or credit transaction.
Credit.
So it is called as
Credit.
credit. What will happen in credit transaction? Immediately money will not be paid.
Paid.
Okay. So they already clearly mentioned that credit. Credit means immediately money will not be paid.
Paid.
So tell me what are the two parties here? Who are the two parties here in the transaction?
Mohan and Voltas.
So first person is Mohan, second person is Volta.
Voltas.
Okay. Now who is buying and who is selling?
Mohan is buying and Voltas is selling.
Mohan is buying and Voltas is
Selling.
selling. Who has to give the money?
Mohan.
Mohan. So Mohan will become
Creditors.
Mohan will become Debtor.
Debtor.
Who is giving credit?
Voltas.
Voltas is giving credit to Mohan. So
Mohan.
he'll become
Creditor.
creditor. Okay. Now have you understood this?
Yes, ma'am.
Yes. Now every year they have to close books of accounts on 31st March and they have to prepare trading profit and loss account and balance sheet.
Balance sheet.
So every year, every company, they will prepare an annual report. So annual report is, they'll be explaining in detail about the company. And finally, at the end, you'll have a reports. Answer. Now, did you see this balance sheet?
Yes, ma'am.
Okay. So, see. This is how you prepare a balance sheet. See, what is this?
Statement of profit and loss.
Loss. Okay. So every company will have like this profit and loss account and balance sheet. Balance sheet, what you'll have? You have assets. You see the first one. Assets. Okay. What are assets means? Properties.
Properties.
Okay. And next one, you have liabilities. You see this part.
Equity and liability.
Liabilities. Now, what does a balance sheet consist of? Assets as well as liabilities. Now, next one is profit and loss account. In profit and loss account, what you'll come to know? How much profit the company has got. Now, you see here. See, profit and loss for the year counting operation, 7,289. Okay. And based on profit only, what they will do? They are going to pay the tax. See, have you seen here? Current tax, deferred tax, okay, income tax. Can you see?
Yes, ma'am.
Okay, so what we do, we'll calculate, see, you see this part, profit and loss before tax, how much you got? Profit and loss before tax is this much. Last year it was this much. Now, once you got the profit, on profit, what you will do? You'll pay the tax. So how much tax did you pay? Okay, whether the company got a profit or loss. Now, this part we are going to prepare. Okay, means in further classes, I'll show you how to prepare profit and loss account. And who is going to prepare all this trading profit and loss account and balance sheet?
Accountant.
Accountant. So once he finished, for whom he'll submit?
Owner.
He'll submit to the chartered accountant. Okay. Now, what does a chartered accountant do? He'll verify all the vouchers and see that whether whatever the accountant has given, is it correct or not. Okay. Now, once if all the accounts are correct, what will happen? He'll put his signature and stamp. Okay. Now, once the signature and stamp is done, they are called as audited accounts. So, on audited accounts, what we do? We'll pay the tax.
Tax.
Okay. Now, this is this slide you see in Europe, how much profit they got. In China, how much profit they got. And in India, how much profit they got. So, they have 3 branches in 3 different countries and how much profit. So, this is the annual report. Like similarly, you'll have for all the companies, you'll be having trading profit and loss account and balance sheet. Okay.
Okay, ma'am.
So did you understand all the terms?
Yes, ma'am.